Hey, what's going on, guys? John here. It is March 6th, 2020. It's almost 4 p.m. in the afternoon, so the trading week is over. I wanted to go over one of the trades that I took this week on Loonie, all right, USD CAD. We had some news earlier this morning. I think it was at 7 or 7:30. But I was in and out prior to the news happening, and the markets basically have consolidated on Thursday and on Friday, but consolidation can have really good trading opportunities, especially with the fact that I've mentioned before to you guys during consolidation is when a lot of the stops are being ran, right? Equal highs, equal lows, imbalances getting filled, and things like that. So I posted in the Discord already, and I'll get to the chart in just a second. What I want to, instead of just giving you the markup, I want to at least walk you through it. So on Wednesday slash Thursday, right, where right after the close, you had these two lows right here, right? So you know that there's some liquidity resting there. And then earlier on Thursday after the close, yeah, this was Wednesday after the close, Thursday after the close, because the 6 wasn't until, yeah, okay, bet. All right, and then so you had relative equal lows right here as well. So it's just off by like a pip or two. So this would still be considered a double bottom in the retail world. So really all I did was, okay, not do that. What I did was stretch out the equal lows for both of them, and then also right here is the 80 level, right? 1.3380. So I didn't place the trade off of the 80 level, but I wanted to be aware of it because, you know, the liquidity was taken on both and we got a sharp reaction from that. So I actually based my trade off of the 5 minute, even though I didn't wait for the market to show us bullishness. I assumed this wick down to 80, and it ran a little bit away from that. And so when we returned on this little pullback at 3 in the morning, an hour into the London session, that's when I went ahead and entered my trade. Now I didn't really do anything too fancy. I just took a fib from the low up to that high, and when it came down to about the 50,618 level, I went ahead and picked it up. So with the spread, I got in about 87, if it'll give it to me, which is about right here. Okay, and if I had wanted to, which I probably should have done, looking back on it now, if we go down to the 1 minute, let me take the fib off, right? Look what happens, right? We hit the 80, we ran away, but we left an imbalance. So it actually came back down, cleared the imbalance, and then it actually headed into the last down candle before the up swing. So this was a institutional candle which also got met. So I was a little bit early. However, price essentially ran, pulled back a little bit, and then ran, and the upside target was met perfectly right there. and that's what also I have in the markup is the liquidity here. So very, very little drawdown, maybe 5 pips at the most, maybe 7 if you include the spread, and went right for the liquidity. Now I got out at 34.15. Okay, so it was just the next whole pip after whatever this level is, 34.13. So I went ahead and went 34.15 for my exit. Now I was watching this, and on the 5 and the 15 minute, I hope you noticed that you see how this wick at 345, it has no wick on the downside, right? This candle right here, there was no wick on the downside. So to me, from here to here was also an imbalance. So there was an opportunity to re-enter the market to go for higher pricing, but at 5, so right before this happened, I actually went to sleep and I wanted to be up for it. And so since I couldn't be up, I went ahead and just took my pips and dipped. Okay, but for the sake of studying price action, I'm gonna just stretch this over a little bit. Right, so you notice how, and this is probably a fib as well, if you do a fib from the low up to the high. So you see how it comes down into the imbalance, 618 level, and then reacts away from that. So definitely a good trading opportunity in there. But yeah, so that's essentially what we had. All right, liquidity being taken, and I only entered the market because of that. And of course, when you have a trade, you also need to have a target, and these two highs right here were too clean for me to ignore, so that's when I went ahead and exited the market. So on Discord, I posted the official markup where you had liquidity under Thursday's low, the 80 level, a whole bunch of we had 2 equal lows, 1 set of equal highs, the imbalances up there. And then I also included the Friday's daily candle open. So you want to be buying below the daily open in bullish markets, right? So we were well below the daily open, and we were only a few pips off from the low of the day. And I know I told you guys I really don't trade Friday that often, but if I do, it's a day trade. Right, so it was just in, out, done. So, and you notice how the market has just been ranging the last few hours. Well, really like the whole second half of the day. It's just been stuck in this 30 pip range roughly. So that's not surprising. It's not surprising at all. So in, out, and that's it. All right, so I hope you guys learn something, and that's it.